Michelle, it's a two-pronged question. One, walk me through your call. And two, how do you even begin to model that?
Sure. Hey, Alex. So in terms of the forecast, as you said, it's really all about Q2, and we're looking for a steep decline, a 12% drop, and on an annualized basis, the biggest in post-war history. And we're already seeing some data to help influence that call. So any indicators for early March so far have been weak. Empire State Manufacturing Survey into recession. The Philadelphia Fed Manufacturing Survey also into recession. Initial jobless claims for the middle of the month spiked higher, and what we've heard so far from the states that have been reporting subsequent data, it looks like it's going to be even more dramatic. So we do think we have data at our hands already to start to think about the impact, but it does also require some pretty brave assumptions about what comes next. You have to think about the course of the virus, when it might start to level out, and when you might start to see signs of a slowdown and a recovery on the other end. You have to think about the economic response when it comes to, state and local governments. What are they doing in terms of the shutdown? Are they enforcing these self-quarantine measures? The more that happens, the more you can say, okay, well, this part of the economy is effectively shutting down. They produce X% of GDP, and that will go away, and you can simulate that forward.
So there's a lot of different prongs to it. I mean, part of it is like the U.S. shutting down. It's also the consumer issue where we're not spending anything on that. And there's also manufacturing that's shutting down, which I think no one expected as much as we're now getting. And then there's supply chain issues. Can you help me understand sort of which is the worst one of all that?
Yeah, so, you're right. You want to look at it from all of those different facets. And I would say the most acute right now is the fact that people are quarantining themselves. State and local governments are enforcing that. So it's creating a big sudden shock to the economy, which on the one hand is obviously negative right now, but it could have long run positives, right? If those quarantine efforts, if the effective shutting down of the economy and the social distancing that it's creating means that you stop the spread of the virus, in the long run, obviously, we'll all be better off. The economy will be better off. But it does mean that there will be some short-term pain, of course. And then consumer behavior, consumer psychology, which is very much linked to that first dynamic around the government response. And the consumer psychology, I think, is a really difficult one, because that one you have to also consider for when the recovery starts. Even when things are back up and running, how do consumers re-engage in the economy? How much pent-up demand is there? Or are consumers going to be changed on a more long-run basis?
So that's a great point, and sort of that brings us to a more structural shift within the economy in terms of when we get out of this, we're not going to go back to as normal. So even if you get some kind of, U or even some kind of V shape, there's going to be some structural changes, no?
I would think so. I mean, after this experience, you could see a different mentality when it comes to working from home or virtual interactions. We're all being forced to move virtual very, very quickly. And some of that might stay thereafter. You can see a difference in how people want to live, urban versus suburban living, as a result of some of these lessons learned. So yes, I do think you have to consider these long-term structural changes as a result of this immense crisis. That said, of course, once, and hopefully soon we get past the spread of the virus, there's going to be a lot of pent-up demand, a lot of desire to re-engage in the economy, and I think that will be released.
And then, Michelle, to wrap it up, what kind of fiscal release can we really see here?
So policy is absolutely critical in trying to understand the other side, when that recovery happens and how strong it might be. And there's going to be two sides, that monetary policy and fiscal policy. In terms of monetary policy, the Fed has been aggressive, been targeted, and they're really determined to get market functioning back, to get liquidity to return, particularly to the Treasury market. And they keep throwing different facilities out there to try to see if any of them are helping. On the fiscal front, we're seeing some progress. We've seen, the recent bill be passed, which is really targeted around trying to get testing out, trying to help those that are hurt from a lack of paid sick leave and the like. The next step is to probably do something big. They're already talking about over $1 trillion. I think that's probably right. Blanketed support for the economy, starting to think about potential bailouts. I very much think there's more to come.